The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good morning, folks. And there's been a lot of news over the evening. And of course, it all started with China devaluating the renminbi. And so the Chinese yuan had its biggest devaluation in 20 years. Now, that's not saying a whole lot because it's been basically an untradeable cross rate for many years up until about the last 6 or 7 years, and it's still not as much as any of the other currencies. There's all kinds of reasoning supposedly why this is occurring. One of them is their inclusion into the IMF and things like that, but part of the news was that they did this to stimulate the economy because they were having problems with the economy. I mean, that's basically, the exports have dropped, imports have dropped, so that's slowed down quite a bit. I don't think it's anywhere near the 7% GDP that they report, but that's neither here nor there. So we'll have to there's a red light out there, folks. This is what I'm going to try to tell you today. First of all, we had that really significant ABCD patterns that occurred on Friday. And if you'll notice here, the first chart that I put into the Tiger TV today is the chart of the DAX. And it also had that same ABCD pattern at the 382. It rallied up to the 786 yesterday. And then when it opened this morning in Germany, it gapped down, and as you can see, we've dropped over 200, almost 300 points in the DAX all morning long. Now, if we should weaken further here and get about another 100 points lower in the DAX, we could be looking at a giant ABCD structure that would take it down below the 10,800 level. Now, this would be almost a crash type scenario. In 1987, the whole thing with the crash started with a currency thing with Secretary of the Treasury Baker being in Tokyo trying to work out some trade agreements, and they didn't, and that caused the dollar to weaken really badly. And away it went. And we're having some strength in the other currencies today. The euro has popped up to the 786, and the pound has held up quite a bit. And so there's a possibility here that we could see some weakness in the U.S. dollar. Whether it'll lead to anything like a crash scenario, I don't know, but there's some red lights out there. First of all, when the market's up 220 points yesterday, there should have been a little bit of more follow through today, because that news didn't happen until real early this morning, New York time. So it had all evening to rally, and yet it started selling off right after the market closed and just meandered down all along, and that's pretty much what has been happening with it. So we'll just keep an eye on it. The things you want to watch for today is if we give all of our gains back in the stock market. The Dow was up 240 yesterday. The S&P was up 25. NASDAQ was up 58. I mean, that's really something if we gave all those up. But if we gave all of those up, that would tell us that we're getting ready for a huge break to the downside. So that's just one of the things that we're sort of focusing on. Now, one of the things we mentioned yesterday that we had to find out about how strong this market was going to be yesterday. And what we're going to do now is we're going to just take a look at that strength. We're going to take a look at the breadth of the market yesterday and sit down, because this is not what you would expect. If you'll notice the new highs to new lows, there was hardly any change in that, with the market had a 6-to-1 breadth up. You'll notice your advanced decline line didn't do very much at all, and your up volume, down volume line didn't do much at all. Given the strength of the market, you would have thought that the market being that much oversold would have had a much stronger participation. It just goes to the same tune that they've been singing all along, and that is that there's a lot of selling coming into the market. Any chance someone gets a chance to sell it, then that's it. Now, we had some news on Google. Larry Page said they changed the name of Google to Alphabet. And he did that so they could think fresh. Well, thinking fresh made him $25 billion because the stock was up 6%, and his share, along with Sergio, was plus 25 billion. So they're thinking fresh and looking good, Billy Ray. That's the way you do it. I mean, that's better than most, much better than most of the IPOs that come out. So it's a heck of a deal for them, and I'm glad it's. Hey, listen, Google is to me one of the greatest things. Well, along with Amazon, Google #1, but Google does more for people. It's just easy to work with. They got good email. I mean, you can, it's the search engine's fantastic. I mean, I haven't been to the University of Arizona Library in over 10 years, and I used to live down there, getting information that I needed, and now everything is at my fingertips, and it's a whole lot easier. A whole lot easier to do it. Now, we want to switch over here for a second here with the gold and silver, because we had a situation last night where we made new highs in the gold on a run up here. Just give me 1 second. I want to put this up to show you the difference, because we did not make a new high in the silver. Silver went up and matched the high, but the gold did go up and make new highs. Platinum did make a new high, but gold did go up and complete the ABCD pattern. Now, yesterday, after we hit that 1108 level, it dropped $14 down to the 786 of the previous day's range, spot on at 1093. From 1093, it rallied another, $26 up to 1119. We just missed 1120. So this market is starting to turn the corner. So you want to watch for corrections. And that's, pretty much what you're looking at. Because the last correction we had here would match up really nicely if it comes down again to around 1103. So watch the 1103 breakout area, because that would be the spot where you want to see if it's going to hold. One other thing that would be interesting about this is that if you drew in the 20-man line that we look at sometimes from our good friend Jim 20-man, you'll be able to see that also comes in pretty close at that point. So anything below 1100, though, means we're going to probably correct a whole lot more than what we wanted to do. Now, silver made a higher high by 1/2 cent, not even a full penny. It went up to 1538 and a half. The high the previous day was 1538. So it did not participate, and now it's actually down on the day now. So it's telling us that we probably made some type of a pretty significant high here for gold, maybe for at least a couple days, and we'll see if we can do some backing and filling. But we've had a pretty good rally off the bottom. We've only rallied $50 off the bottom, and most of these rallies that we're expecting with open interest like it is should be somewhere between $150 and $200 an ounce. That's what happened, back in March when we hit that 1130 level the first time. We rallied all the way up, to 1231, which was 1321, which was a $190 rally. So we should get one at least equal to that, because of the fact that there's so many hedge funds that are short this. Anything above 1130, they're going to be underwater, and that's where they're going to be under some pressure. Now, if they're in the silver, which we don't know, but we just know the figures on gold, but the silver has already popped above that, because that old high was at 1508, so we went a good 30 cents above that on this last run. So anybody that sold that back on July the 27th is now setting underwater. So this is what we're looking at in the gold. Still looks bullish, acting okay, looking for backing and filling here. Buy the dips. That's pretty much what you'd want to be looking at, and that's primarily what we're trying to see. So that's it. Okay, now the the one question is someone's asked about the renminbi, which is basically the Chinese yuan. It's trading at about 6.4 to the dollar. When I first started going to China back in the late 90s, it was just under 13. It was around 12 and a half. Since that time, it's went in half. It went all the way down to 6. But if you looked at the chart today on the Chinese renminbi over the last 3 months, you see a chart that looks like Google. I mean, it is just straight up. But it was a 2% move, which is substantial in currency because of the leverage that's involved. Some people really got hammered on that were the wrong way, and there's nothing you can do about a currency thing like this. We saw this happen with the Swiss franc many times worse. Last year when they disavowed themselves to the euro, and it dropped $25,000 in a matter of 10 minutes. It's since got all of that back, but during that time it bankrupted 2 of the the larger forex firms. So these things can occur. You can't really do much about it because your stop is not going to be hit because there's nobody else wanting to do business there. So this is part of the market risk that you have with the opportunity of being a trader and making money. You've got to assume some of these market risks, and frankly, I would not be trading the renminbi, but the Swiss franc was certainly tradable, and that was one that you could have been the wrong way. And that would have, that would not have made you very happy. I didn't know anyone that was on the other side of that trade. I knew someone who was on the right side of the trade, but no one on the wrong side of the trade. And believe me, I was not in it, so it wasn't me what we were looking at right here. Now, we have a pretty good rally yesterday in the grains, and they've given some of that back, mainly because of the selling that's in all the commodities. I mean, even copper, which has been, a heck of a big mover, has really been a really big one. Hold on here a second. I'll pull up the chart, and you'll see we did the same thing in copper that we did with the silver, but it was even more so because copper didn't even rally at all hardly. It just basically just popped up, and give me 1 second to put the hourly up. You can see it a lot better. Wow, copper is all the way back to the old lows, folks. I just realized that. Well, just in the last couple hours, this is really nasty. Holy moly, guacamole! This is really interesting here. We had an 11-cent move up in copper, actually 12-cent move up in copper, and a 12-cent move down in copper. Copper's moved 24 cents, more than 10% of its value in the last day, folks. This is a monster move. Anything a little bit lower than this, you're talking about some real serious things happening. And this could be another thing of what's going on these red lights that we could be looking at today. Because if the market doesn't hold up here and it really gives it all back, what happened with the Chinese thing is they played their last hand of poker because they put all their chips in with a 2-3 offsuit, and that's not a very good hand. So this could be something really significant today. This copper move caught me by surprise here, but boy, this is a big move. We'll be right back after these few words. Wow.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we've had a request to take a look at the long-term chart of copper. I posted mine into the room, and then also Steve Rhodes was kind enough to share his charts, and you can see that we hit some pretty strong support. And when you rally 13 cents in copper in one day and then give it all back the next day, that's not good action. You know, it's really, really quite scary, as a matter of fact, because if it doesn't hold here, of course, if it holds here, that's a good thing. But if it doesn't, oh my goodness, you're looking at some really more movement to the downside, because that's the biggest rally we've had in copper in months. And if it gave it all back in one day, boy, that's not a good sign, unless you're in something like Google. So who knows? Two questions popped up. One, do I think that the devaluation in the Chinese renminbi is enough? I have no idea. That's so far above my pay grade, I wouldn't even want to attempt to look at it. I mean, I'm basically looking at the chart. I've never traded the renminbi. You know, someday we will, because it'll be very, very important. But well, it's still important, and it's tradable now. But you know, you don't want the illiquidity like you have today. That's just, you don't need it. I mean, you got the euro, the pound, the yen, the Canadian dollar, the New Zealand dollar. You know, the euro, the pound. I mean, you got all those cross rates that are so good. You don't need something that can cause you nothing but heartache because of the fact that it has low liquidity. So just don't mess with it. Yesterday, you know, we had that The Chinese stock market, was up almost 5% yesterday because the limit that was actually the day before yesterday on Monday. Because they were already finished over there, and it was down just a little bit today. But they were lock limit up and all of the transportation things that they have, the shipping business stuff, and then the market, sold off a little bit today, down less than 1%. But this is a rigged market over there, folks. They're playing games with it. I don't think there's any question about it. First of all, when you have limits in something, that's not a good thing anyway. The next thing that someone asked, and the bottom line is, I don't know if the renminbi, the devaluation means anything or not. Well, it must mean something because it hasn't been done in 20 years. The thing is that it's basically showing their hand that they're having trouble with their economy and they're trying to stimulate it. So there's not a booming economy like they've been telling us for weeks and weeks, but the commodity markets have been telling us this for months and months because nobody's been buying this stuff. So that's the bottom line, and the transportation index has been weak. So, they're not even shipping it. So something is not right somewhere, folks. Where it is, I don't know. And when you look at the stocks that we have on the internet, as a matter of fact, last night when someone sent me the fact that Google was up 6%, up $47 a share. I said, oh my God, the NASDAQ has got to be going nuts because Google is, 10% of the NASDAQ with their Class C, Class L, and the regular class stock. So, and when I saw the NASDAQ selling off, I said, my gosh, that must mean there's a lot of NASDAQ stocks that are getting hit in that group of 10 that is so big that there's something again is not right. So there's something's going on out there. It's a little crazy. I mean, that big day yesterday should have seen some follow through, and maybe we'll see it today. Maybe the follow through will start after the opening. We'll have to let the market tell us. But we have some warning signs out here, and we're going to talk about those when we come back. We have to get back to the bonds. I posted the German Bund in here to show you that we still have some more to go to get that German Bund up to the 156 level. We're trading at 154.5 right now. Notes have now taken out the highs of the other few days, so that divergence that was there between the notes and the bonds of U.S. 30 bond is no longer there. We're going to talk about that after we have the short break coming up, because if there's going to be anything crazy going to happen, you're going to see a flight to quality in the bonds. That's usually what happens. This happened in '87. The market was down 300 points in the Dow at the beginning and just kept going down. And bonds had been down about a half a point, and then they started to turn, and bonds rallied 11 points over the next few days in a flight to quality. So that's the kind of thing that could happen. So we want to, follow it just to see what's going on. We got a lot of numbers up here in the bonds, both the German bond and the Treasury notes and the Treasury bonds. And we are in a downtrend, and we're in a situation where the Fed's getting ready to raise rates sometime. Whether it's going to be in our lifetime or not, I don't know. But it will be probably more sooner than later, because the rates are certainly telling us that's what we're looking at. Okay, we'll take a little break here, and we'll be right back with you.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN. Everbank is a member FDIC.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we are taking a look now at the crude oil. As you can see, last night we rallied up to almost the exact 61% retracement. We missed it by about 4 pips from the high that we made back on August the 5th, and now we're challenging the bottom down here at the 43.30 level. The $64 question is whether it's going to hold that level or not. We'll have to wait and see. So far, we'll just give it a little bit of a break here and see if it's going to make it, because gave it up pretty quick, just like all the other things have. So we'll have to keep an eye on it. We're getting a little bit of a bounce now after the early part of the stock market. We're still down quite a bit, but whether we rally back more from here, sort of remains to be seen, but it is quite active. Now, the one thing, we talked about the German Bund right before the break, and now what I wanted to do was to go and bring out the price of the 30-year bond, because that's the one that is really interesting to look at here, because we have a situation, we're almost up to that 159 level, which should be some interesting things. Now, folks, if this is correct, you shouldn't be looking at strong bonds and strong stocks at the same time. And the reason why is the flight to quality thing that occurs. So just keep in mind that this could be, very, very tricky up here, because you've got a lot of numbers coming in at the 159.10 level. The first numbers that we hit yesterday at the 158.20 level, we broke 2 full handles, and we've given all that, just taken it all back already. Today we're almost ready to challenge that old high again, which is very easy to do. So keep in mind here that we've got some real serious things going on in these markets, and you don't want to get trapped into it. We're making new lows now as we speak in the crude oil market, which will bring in more buying in stocks, because that means consumer income is increasing, and so they'll be able to buy more things at Google and at Netflix and all the other wonderful places that you shop. Let's take a look here at the Treasury notes. This is the big market. This is the largest of all the commodity markets in the world. There's nothing any larger than this. And we'll pull up the daily chart on this, and you'll see that we have the same situation coming up here very, very shortly, where we're going to be retracing to the 61% retracement of the March highs. We almost hit it once before, but we're almost there again. And I assume we're going to get there without too much trouble. So we'll see see how this is going to hold up, pretty much today. Now, if the market, the stocks, come back and take off everything that they lost overnight, then I believe that bottom we made yesterday is that bottom we made on Friday was very important. I don't think there's any question about that. But the real key date is coming in when we have the full moon, which comes in on Wednesday, Thursday of this week. I don't think it came in 2 days early, but you just don't know. But the fact that the market gave up so much of that overnight so quickly is really quite, but look at it. The Nasdaq's rallied 23 points since I've been on the air. So you see how quickly these things move, and you just don't want to stand in front of them if you're on the wrong side of these. You have to wait for certain things. Now the S&P has not rallied much. It's only rallied about 4 points, but remember, the Nasdaq has got the Google and Apple and all the other things in it, the Gileads and Apple, Amazon, Gilead, Google. I mean, all of the big ones are in there. So when they move a little bit, it moves very, very quickly. So we'll watch. Now, we made a new low now in oil by just the one tick. We haven't taken it out yet. So maybe this is going to be one of those days where it's going to be what they call turnaround Tuesday, as Art Cashin talks about. But I wouldn't sort of bet on that, just because of the fact that we've had such a big downdraft in some of these things, specifically in Germany, because that German DAX is huge, folks, and it's traded by a lot of people all across the world, and it gave up over 300 points today. For it to take that back is going to be pretty substantial, but it certainly can do that too. So just keep in mind that, as the old Chinese curse says, may you live in interesting times, and that's certainly what we're looking at. If we take a look at the long-term Treasury note market, oh shucks, that doesn't work the way I wanted it to do. Give me 1 second here. I have to change that just a bit because of the fact that we had that maverick month of September, and we cannot use that. So I have to go to do the spot carry through, and I wanted to show the long-term chart on this, because we are in a long-term downtrend in the Treasury notes. There's no way you can not say that, because of the fact that you've had lower highs now for several years, and now you've had some lower lows or higher lows here over the past 18 months. But the rally has been, relatively weak. So we are in a long-term downtrend, which means interest rates are going to go higher. The $64 question is, how much higher are they going to go on this run before they turn down? And I believe that we have a lot of resistance up here at the 159.10 level in the 30-year Treasury bonds. But if we have a market that a stock market that really weakens up, And weakening up would mean that we'd be taking out those lows of yesterday. You're going to see bonds and notes go a great deal higher because you'll start to see a flight to quality into these things as scared money starts to move. Now, there's no reason for anybody to be scared in the market by looking at the VIX index. It's basically done nothing. I mean, it's showing you that there's absolutely no fear out there. Well, that's when fear catches you, is when you're not expecting it. That's what fear is all about. So, maybe it's a day like today, a day like tomorrow. It's coming. I don't know when it's going to be. I think sometime during August and September, we're going to see one of these downdrafts that there are people are going to turn around scratching their heads and wondering what happened. But we haven't had anything like that other than the flash crash, several years, 3 years ago, and that was basically an aberration, and they canceled, many of the trades that we're looking at. But there's some really scary things going out there today. Not just the Chinese renminbi being devalued. You had the sell-off in Germany right from the get-go, down over 300 points, 2%. Our markets sold off. We gave over half the gains yesterday. We gave those back in just a matter of a few hours, which usually when a market's up 240 points, there's some follow-through the next day. And, I'm just looking at cycles, and if these cycles are turning faster than I think they're supposed to, I thought it wasn't going to happen until maybe Thursday. We have to, sort of be prepared for that. The things to watch for, and believe me, this is really an outlier event if something like this happens. Watch for where scared money goes first. Watch the currencies, and we could be in a currency war. Maybe it started. The dollar is weak today. The euro has gone above the 786 retracement of the previous high. That had not done that for a long time. And we're starting to see some other things that are just besides the renminbi. But we're not involved with the renminbi because we're not trading Chinese yuan for dollars. We're basically looking at euros and pounds and yen and stuff like that. So it's big on a global basis for what we do here. It's not that much. Someone asked a question about that FXI, and I'll bring that up and show you what we're looking at here because it really didn't do much yesterday. It was up a little bit, but given the fact that they had all that news that went on with the Chinese market, this thing really did very, very little. And today it gapped down substantially, and which it gaps all the time because of the difference in the times of when they're open. But you'll notice that the FXI, really didn't do very much. Now, we also had a huge move in the Australian dollar last night, all related to these commodities, of course. And I'll put that up because I was watching this very, very closely. And we did back off to the 61% retracement of the lows over the last 2 weeks. But we are now going just a little bit below that as we speak here, which is indicative of lower commodity prices like oil and also copper, steel, just about everything. I posted a chart in the Tiger TV this morning. The first chart that I posted was the New Zealand dollar against what the milk futures look like. And as you can see, the milk futures and the New Zealand dollar actually go hand in hand, and that's because New Zealand exports so much milk that it has to go pretty much tick for tick of what the New Zealand dollar is doing. So we're seeing a lot of movement there. Whether this is a major, currency war or not, I don't know. But if it's a currency war, it's not good for stocks, and it might be good for bonds short term as people try to find a place to put money. But longer term, it's not good either because that just leads to just massive slowing of business. And the problem, folks, is that this quantitative easing is the problem. I know it looks like it's been the solution, but for 6 years now they've been doing this, and they've been postponing, the inevitable, and that's the economic cycle of ups and downs. And we haven't had any downs. Not since July of 2011 have we had a major correction in the stock market, and it's coming. And it'll probably be faster than what we want to think of it, what it's going to do. But it is coming. So whether it's going to be today, tomorrow, the next day. Just watch for some of those signs. And another sign, one is to watch for the currencies to move a great deal. Two is to watch the bonds and notes, watch those move a great deal, and that should be to the upside. In other words, people rush to bonds and notes in times of trouble. The third thing is watch for vacuums in the stock market. In other words, you're looking at the S&P trading at 2085, and you look up and it's trading at 2075 or 2065. In other words, so much selling that hit it that there wasn't enough buying to absorb it, and the market just drops. And the markets fall faster of their own weight. They go up on a lot of energy buying, but boy, they can drop of their own weight very, very quickly. So that's another sign that if you see something like that and you're long, just make sure you protect yourself. If you're short, you put your seatbelt on, buckle up your hat and your helmet, and just let her rip, because you don't know what's going to happen. But these things can really go down. And hey, look, I was in '87. I just know what that's like. And we haven't seen anything like that before, and I don't know if this is going to be it or not. All I'm saying is that we're seeing a bunch of things happening that make you wonder whether it's going to be straight one way or straight the next. We'll have, or straight up or straight down. We'll have to let the markets tell us that that's what it's going to do. Okay, now we have another question about Apple. We have to have a question about Apple every day, or it wouldn't be TFNN, would it? So hold on just a second here. We'll see. We had a big move in Apple yesterday. We gapped down a little bit today. Let's just see. It hasn't done very much. Let's see if that rally yesterday was anything. Well, the rally yesterday was exactly a 382 retracement of the whole move down. Whether that's going to be enough or not, we'll have to see what's going on. Now, oh dear, we have another question about something that I never trade, but I'll bring it up because someone asked me to do it, and that's about coffee. And we will bring this up to show you. We had a wonderful, I don't trade this stuff, believe me. When my grandma was teaching me to trade coffee, she said, whenever you have the urge to trade coffee, go lay down on the couch until the urge goes away. And she was absolutely correct. Those back to the old days. Anyway, here's a chart of coffee. We've had one heck of a move from $1.19 a pound up to $1.33 a pound. That's a considerable amount of money. We're approaching the 786 retracement of the June highs right now, and we've already equaled the last rally that we had in May when we rallied 17 cents a pound. So we are very, very close to that. That would come in around the 135 level. And right now in coffee, we're trading at 135. I'm the only reason I don't trade coffee, folks, because back in not 87, oh my God, back in 1974, I was long some coffee, and I sold it at the market, and it was limit up, and I got filled limit down, and the broker on the squawk box said, "Do you want to trade or not?" And when he said that, I knew that there were pools. And so I said, yeah, I'll take the trade. And it was a $20,000 swing. And since that time, I have not traded coffee or orange juice in well over 60 years now. It's 50 years. So, and I don't need to start now. But the patterns are there. It works pretty good. It's a liquid market, and electronic trading is not a bad thing to trade. That's just my preference of what I'm looking at. So we'll see how that shakes out. Okay, we've taken a look at Apple, and we'll see what the other things are doing now. And the FXI, we've looked at that, so we have a pretty good idea what the Chinese market do. We've got to come up here to the next break here, and then we'll see what happens. The bonds are still holding their own here, looking strong. And we'll be right back after these few words, and we'll be right back.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Folks, and as a review here, I posted into the room earlier today the breadth of the market as of yesterday, and it certainly didn't look very good, even though the market was up 240 Dow points. The new highs and new lows, didn't even budge. I mean, so that's not a good sign. I've posted the chart of the New York Stock Exchange Index over the last 3 months. As you can see, we've been in a very strong downtrend. Yesterday, we did not even take out the highs of last week. So we've had some lower highs come in here. We've gapped down today, of course. And if we take out those lows that we made on Friday, that sets up for even a much, much greater move to the downside. So even though the markets had a big run yesterday, that's basically, it could just have been a one-day wonder. And when you look at the German DAX, it's keep making new lows ever since we've been on the been on the show today. I mean, we had a 30-point rally in the NASDAQ, and the DAX was going down all during that time, making new lows. So there's selling coming in across Europe on their indices, the FTSE and the DAX. And we've had some selling a little bit today in the S&P, and also somewhat in the NASDAQ, but not very much. But the overall market, of course, we've had some selling. So these are the things that we're watching today. Keep an eye on the Treasury bonds, folks. Anything above, if they should really get strong here, you're going to be looking at a flight to quality, which means that the stocks could weaken really badly. So keep an eye on that. The second thing is to watch out for gaps in prices. In other words, if something's trading at 56 and you look up and it's trading at 52 or 53, that just means that there were no buyers at that point, and that's when you get these vacuums occur. And we hadn't had anything like this happen in a long time. So many of the people that are in here trading over the last 6 years have no idea that something like that could happen. And the VIX index is so complacent. There is no fear in the market at all. And fear might come in 1 day, it might come in 2 days, it might come in 3 days, it might not come at all. But when it comes, and it usually does, it'll probably scare the bejeebies out of a whole lot of people. So pay attention, stay alert, be nimble, live every day in an attitude of gratitude, and may God bless.
Tom O'Brien has just announced a live online workshop taking place Wednesday, August 12th, 6 trades for September. This special event will be open to all subscribers to his daily newsletter, Market Insights. Tom will walk you through 6 trade setups in the market he's identified setting up for September. 2 long positions, 2 short positions, and 2 option trades. New subscribers will also receive a free copy of his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. But we're not done yet. We're also including a Tiger's Den membership as part of all Market Insights subscriptions at no cost as well. You get Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, 30 days of his newsletter, Market Insights, access to his live online workshop, 6 trades for September, and access to the Tiger's Den. This offer is only valid for 2 weeks, so don't miss out. Sign up for your 30-day free trial to Market Insights at the front page of TFNN.com today.